Hello and welcome to the Tuesday trading session right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. The price of 70-gram carton of noodles has fallen by 40% in 5 months despite sky-high food inflation. And Ghana's non-traditional exports soared to $3.9 billion in 2023. Plus, Kenya's Treasury targets gamblers with a raise on betting tax. And it's great to have you join us. I'm Ladi Williams. Let's kick off with markets now. We'll see the oil market. We'll see prices seesawing this afternoon from the morning trade, $83.30. That's what we have for Brent. 0.07% marginal decline. So we're seeing some kind of upward movement, but a marginal give up there for the price is $79 still for WTI crude. Still staying below that $80 mark, 0.04%. So it's also marginal drop there. And investors are trying to assess what's going to happen with supply and expectations for demand in the oil market. And see, that's what's driving prices up and down at this point. We don't have a direct direction right now for where oil prices are going at this time. But let's get a check on the metals market now. See, gold prices dip. They dipped earlier today, but we're seeing an uptick now, $2,351, 0.13% jump this afternoon. Spot silver, that's a bigger rise there, 0.82%, $28.67 per ounce. And we see palladium's not left out, 1.37% jump this afternoon. So we're seeing most of those early losses being flipped at this time. Let's get a sense on some bilateral relationships. Now, see, Taiwan believes that Nigeria has a potential to develop its technology and boost bilateral trade between both countries. This was part of the conversation at the Nigeria-Taiwan Business Forum held in Lagos. The Director General of NACIMA, Mr. Olushola Obadimu, who attended the event, is asking that policies are more focused. Take a listen.
One business forum in Nigeria has its eyes on improving on the $500 million volume of trade recorded in 2023, a volume that places Nigeria in second position among Taiwan's African trading partners.
What you have seen all around you are representing Taiwan's industrial power based on our good education, our good investment into promoting our own brain power. So Taiwan and Nigeria is a mutually complementary partners. We always said that because we, the people in Taiwan, we do only legitimate, fair, and free trade. We do not come to your backyard, dig your gold. We do not do illegal mining and stealing your solid mineral. We provide good equipment. We sell you with good facility and know-how. You buy the product, you buy the facility, and you produce your own product. We will buy from you with fair market price. This is what we call a legitimate trading.
Many lessons which Nigeria can learn from Taiwan abound, and participants, including the Director General of NACIMA, has this on his mind.
Around 1960, together with these Far Eastern countries, we were about the same thing economically. But you know, focus is a big thing. Leadership is a very big thing when it comes to running national economies. You don't run national economies as if you are running a shop. It's different. And we've got to develop to a point where we've got to have our long-term goals set, that people, whoever comes to power, can still see that goal and key into it.
Apart from the lessons to be learned from the survival of Taiwan economy in the face of natural disasters, Nigeria seeks to acquire skills in technology, which has made Taiwan a major exporter of machinery to the United States, Nigeria, and other countries.
Let's get to our first conversation now. A report by AFDB shows Africa's population is projected to double by 2050 and by 2100, meaning 1 in 3 people on Earth will be African. The report also suggests by 2030, about a quarter of the world's population under the age of 25 will be in or from Africa. Well, let's get to discuss prospects now for Africa's youthful population. Joining us for this conversation is Olauton Fahimi, Associate Director at Micro Media Craft Associates, joining me right here in the studio.
Hey.
Great to have you.
Good to be here. Thank you.
Yeah, so quite an interesting report there by the AFDB.
Yeah.
Saying that population under the age of 25 will most likely, be from Africa or be in Africa at this time. And definitely the question now is, it looks like the world will also have to depend on our capabilities.
Right.
Quite interesting.
I mean, we saw it coming. Nigeria has very vast youth population, and that's a plus, if you ask me. If we decide to tap into the possibilities, right? Any youthful country or environment that takes advantage of that youthfulness, because that's the point of life where you are most creative, where you can innovate and bring out your inner recesses. So Nigeria has an advantage, and honestly, this is the time that we should look into that capital, that human capital.
So we've seen some countries like, the likes of France and, Germany, they have an aging population, and
absolutely,
it's stressing them out, at this time. So, talk to me about what, Africa should be doing now in countries like Nigeria, knowing fully well that you have this advantage.
Right. So what we should be doing now is looking into this youth population and discovering them, right? I've seen some clips on social media of people who created something in different parts of the nation. You just see that people say give likes on social media, and it ends there. I don't think that will help any nation to grow. We need to fish out people like that and invest into them. Nigeria as a nation now should be thinking of building infrastructure that supports creativity, innovation, because you can never have innovation without infrastructure, right? So if Nigeria really wants to take advantage of the growing population, the growing young population that we have, Nigeria as a nation, the government, they need to begin to invest into infrastructure, research, the energy sector, electricity, power. We have several things that shrink innovation and creativity right now. And if the government can help us to invest into those things, it will really be at our advantage, because we have the population, we have the strength, we have the number. It's now to take advantage of that. Yeah,
I'm definitely, everyone's looking to the government at this time. But talking about, the government, we've seen budgets for education, in major African countries, still under that UNESCO benchmark. I think the UNESCO benchmark is over 20%, of your budget should go towards investment in education. Well, we've seen a lot of single digit investment when we look at the budget, at this time. So can we still make it, with this budget for education?
No, we can't. And if we're going to make any impact in education, the first thing we should be thinking, is to work on the curriculum, to be honest with you. The current education system in Nigeria is very theoretical. We just get to school, see those big books, the handouts, we put them up, and at the end of the day, put them down, get good grades, we're out. Trust me, the reality, what happens outside the school system is completely different from what we are told in school, right? So when there is conscious investment in education system, whereby we are able to, one, introduce, look at developed countries. In school, you'll start learning how to be a creator. By the way, every man is meant to be a creator. But you start when you're in school, not when you go out and you start writing CVs. That's when you realize that you're supposed to be an entrepreneur. It starts when you're young, when you're in school. So the curriculum, there needs to be an introduction into it that allows people,
because I guess the curriculum, we're still trying to find X and solve for X. I wasn't a big fan of maths, but yeah.
So I wasn't going to go there, but you took me there. So we were looking for X, right, for so long. But the truth of the matter is, when you get to the real world, you see that power that you don't have, that telecoms that's not working well, that energy that is not working well, the road system that's not working, that's the X. We actually thought to find X. We didn't know that X are the challenges that we're going to meet when we get to the real world. So the school system, I think it was one of the great minds that said that the school system teaches us what to think and not how to think. So if we begin to invest into the school system, even educators themselves need to learn, need to train that you're not supposed to just bring big books and throw it on the young ones and then they give it back to you, you give them good grades, and we launch them into the world, to the market. And they are there is no employment. And the ones that are even employable, they don't have employment. And then a chunk of that are not even employable. So going back to the X, the curriculum has to change. It has to be more practical. It has to be more hands-on. From school, we should know who can create, who is, you have a lot of people who are better. I studied quantity surveying. Ask me what I was doing there.
Solving for X.
But I came out and I realized, no, I'm not built for this. I'm built for marketing comms. But how many Nigerian young people discover that? You just find a lot of round holes and we're putting square pegs into them. So if we go back to this X thing and the investment into education, there needs to be a turnaround. The government needs to help us to build our schools. And when I say build, I'm not talking about the structures. I'm talking about the people, what they go there to learn, because it is what they get that they give out when they come out of school.
Right. And definitely, we do keep talking about what the government has to do at this time. But take, for instance, the government is not going to do it. Where do we go?
I like that. Thank you very much. So the issue of revamping the system, the economy, I've always said that. Look at the labor survey by labor force survey by NBS. The last one, Q3 2023, was at 5% unemployment. It's going to go up by Q4. That's a given. How do we solve this problem? It cuts across. The government has to play their part, and we've been talking about the government for some minutes now. The private sector have a part to play. They need to work with the institutions and bring real life to the schools and not just putting textbooks up there and putting them down. The schools have a part to play. The educators also have to learn what applies in developed countries, what they do, what has worked for them, how they have grown, how they are practical, how you see young children in some schools, they're not running around the streets or they are not going to church to pray. I'm not against praying, but they are creating stuff, they are coupling stuff. That's where we need to get to. Now, come to the youth themselves, which is the question you have asked. You need to find yourself. And I say it every time, every person, every young person has a gift, has that thing they can create. Everyone is meant to be a creator. And when this happens, you realize that you're not going to come out of school writing CVs. You'll probably come out of school, and after a couple of years, people will be writing CVs to you because they want to work with you or work for you. And that's where we are meant to be. So if we have a chunk of Nigerian youth who are not thinking of coming out and writing CVs, who are thinking of coming out and creating things, then we're going to have at least you're going to help your own economy, then you help the economy of your environment. Just like you said, what if the government doesn't do anything? Then we have to stand up for ourselves. We have to do something for ourselves. So I keep advocating that as young people, we cannot wait for the government. Find yourself. Ask yourself, what can I do? Growing up, I realized that I was good at writing. And then from writing to writing copies to comms to marketing to digital, here we are today. So it's a step after another. But that is where we need to be. Don't depend on the government. You've gone to school taught you what to think, then you have to now teach yourself. Most of these skills are available on the internet. Though,
I'm talking about the internet. There is a cost of living crisis.
Absolutely, I was going to say that.
It's getting more expensive
Exactly.
to even afford data. So we see most of the youths actually struggling financially.
Yeah.
At this time, and they're also trying to get this knowledge.
Right.
Going forward. How do you balance that? Knowing that you don't even know where you're going to get the next meal.
Exactly. So, which is why I said it's a collective responsibility. If the government helps with infrastructure and we get to the point where data is cheaper, then we now need to have youths who are serious-minded, who are not going to use that internet looking for what
we get the telecom people are already talking about increasing tariffs, at this time.
So it's getting worse. So it goes back to, because if we have a stable economy, you would, as the telecoms wouldn't have a reason to take up, to increase tariff. Right? So that's why I say no matter the conversation, we're still going to go back. You see, the challenge with asking the government is everybody's looking at Abuja, everybody's looking at Aso Rock, and that's where the problem is. Aso Rock cannot solve the problem of every street in Nigeria. We have local government chairmen. We have LCDAs. We have, there's the federal government, and it comes down to state, and then it comes down to local government, and then it comes down to wards, then it comes down to streets and all of that.
But we're all always looking at the big guy.
Yes, and it's not going to happen. So we should move our focus. Those people closest to us at the local government, are we holding them accountable? What are they giving back to the society? Do we have access to funding at whatever level? So you have some NGOs, some private companies doing these things in trickles. They're helping like 5, 10, but we're talking of over 200 million people. And you have some very significant percentage of it being youth. So how many does 5 and 10? What does that help?
Right.
So there has to be a big picture. Task every local government to take responsibility of their area and the people there. If it's bigger than you, you move it to the state. If it's bigger than the state, you move it to the federal government. That's how it works. But we're all looking at the federal government, and it's not going to happen. The federal government can attend to 200 million people.
Right. But from where you're looking, at this time, we're still looking at 2030.
Right.
So what do you think?
It has to be a long time.
Yeah, I know it's a long time, but how should the average youth be thinking, right now before we get there?
So before we get there, an average youth, I say that look into yourself. You have something inside of you. You said the thing, and I don't know, I think it's the introduction of technology, right? And then it helps you to see what other people are doing. We're so quick to see where they have gotten to. We don't take time to watch their story, the struggle, how they got there. There is no human being that you see today. In fact, as even age, you don't get born and then you're 40 and then you're 50. It's the same thing with growth, with whatever you do, right? You start with there's this thing I always say. I say, start where you are, use what you have, do what you can. It's a mantra I always give.
Right.
Start where you are.
Just start where you are.
Just start where you are. Writing started with, and I hate to use myself as an example, but you're in school, your friends tell you, oh, I want to, boarding school, I want to write a letter to my parents. Can you help me check if it's good? That's a signal. Something is telling you that you're good at that thing and your friends are paying attention to it. They're asking you to solve that problem for us. When I was in secondary school, I had a friend who would write list of Bible societies that will, when you do an exam, they send you some questions, you write the exam, they will send you a big Bible Society of Nigeria. At that time in secondary school, several years ago, he was selling every address to us at 5 naira. That was entrepreneurship.
Right
we
there.
didn't know, right there. So when they give you money to go to school, rather than use it to buy fish, you would buy one address and maybe take garri without fish.
And you see those guys come out later and they're billionaires.
Exactly. That's where it starts.
Right.
So and let me come to parents. Parents are afraid, which is normal. They think that if young people in school are thinking entrepreneurship, it will affect academics. They will not have good grades. It's fine to have good grades. That's where we come in as parents to help them balance. So in the morning you go to school, in the evening when you come back, you put 1 or 2 hours into your craft. Because for all you care, are you aware that there are organizations right now that are encouraging their staff to have side hustles? Yes, as long as it's not conflict of interest. So if I'm into marketing communications, I have a company, you're my staff, you can't do marketing communications, but you can sell shoes. Because that gives you an extra source of income. They're not even expecting you to depend on
And
salary.
workers need a lot of side hustles.
You know, when you're paying energy bill, school fees, you need multiple streams of income. So if you start from school, it grows with you. And you know, so if you start a tree, if you plant the tree today, you know what it will be in 20 years. That's how it is.
So we'll just start now.
Just start now.
Basically.
With
Thank
whatever
you so
have.
much. It was great having your perspective today, Mr. Lauton.
Thank you so much.
Associate Director at Media Craft Associates. Thank you so much for coming on today.
Thank you.
All right, so we'll take a break now. When we come back, we're going to head straight to the market and get you the details of what's happening on the local bourse and also in the global markets. That's in a moment. Just stay with us. Welcome back. Well, right about now, we're going to be joining a live coverage of flag off of monthly empowerment programs at the Kano State government happening at the Coronation Hall in Kano State. But right here, Business Corporate is still going to be going on other platforms right now. But we're going to head to the markets now. We have Anita Edwards giving us the details. Definitely, we got that down a red start for the week. That's for the NGX, local equities market. And it seems we might have that trend again, another weekly loss for the market, the way it's looking.
Yeah, Ladi, it's not surprising because, of course, with the Nigerian stock markets, the month of May is just about, we're almost into the half of May, and so far we're down by 0.5%. And now it's because it seems that there's a paradigm shift of local investors as well as some pension fund administrators from the equities market, as well as some other profit takers from the market. So that's the reason why you see the market, the equities market, maintaining that downturn. Yesterday we had a analysts saying that the market is in a correction mode, because all the way from 100,000 or above 100,000 points, we've receded to about 97,000 and still going down. So it's
a correction at the end of the day. That's what your guest said.
Exactly, that's what he said. But I don't know what my guest for tomorrow will be saying about it, because it's coming in the midst of some first quarter earnings, which are still coming in. Yes, we're very much in the second quarter, but there's so many other factors and no stimulus for the market, because we expected it to be in the green.
Sell in May and go far, far away.
I think I'll go with that. With the generally known market balance. But before that, let's get on with the market intraday numbers. Starting first of all from the Nigerian aspect of the market on the African continent, down by a tad, 0.05% intraday, and of course this number is still going up and down, but very much in the red at intraday. For South Africa's JSE Stock Exchange, 0.35% in the green, as well as the other markets where we see on the market for Egypt, 0.29%, very much above 0.25% increase. And for the Kenyan Stock Exchange, strongly 2.38% as the close of Monday's session. Now let's talk about Nigeria. The Naira, it is at a 7th-week low, which you can see on the screen there. At the official market, the Nigeria Autonomous Foreign Exchange Market, we see the local currency dropping by 0.8% to 1,478 Naira 11 kobo against the dollar. That's as at Monday. We're having some intraday numbers. And talk about intraday number for yesterday, it had reached its lowest level since March the 20th. Sometime this year. Of course, that's not the high. That's not the lowest level it has fallen to. It had dropped to about 1,000 or above 1,900. But for the close of Monday, this is for the NAFEX. It was 1,449.80 kobo. In contrast to what it had here, so it was down by 0.39% and at NAFEX and 0.80% at NAFEM. For the BDC rate, it's still very much within, it's a continued decline for that market. Now, let's talk about the fixed income market. Yesterday, we had the FGN bond auction for the month of May, which we saw, we will be having the outcome. But for yesterday, on the FMDQ exchange, we saw the total number of deals there, 19 at the total value of 19.7 billion naira, and the major contributor for that, which we see here, is the 21st of June paper 2038 at the price of 94 naira 24 kobo. The total value there traded was 10 billion, and the total number of deals there 6, in contrast to what you have on the other side. Now let's talk about the Treasury bills market. We see it here. The major contributor here was the 6th of March 2025 paper, 20.65% discount. The total number of deals carried out on that market was 18 at the total value of 19.16 billion naira. Now for the OMO market, where here we saw bullish sentiment, but on the bond we saw the bearish sentiment, while also here we also saw some bullish sentiment. For the 6th of May 2025 paper, total number of deals there, that was the only instrument traded there, total number of deals 2 at 5 billion naira. Now let's get more perspective on the bond auction results carried out for Monday by the Debt Management Office. And we have Nabila Mohammed, financial market analyst with Chapel Hill Denham, to give us more details about that. Thank you for joining us, Nabila.
Thank you for having me. Good afternoon.
Okay, so now let's start first with the bond auction yesterday. We know that Nigeria's debt instruments are always very attractive. We saw about 11 trillion naira being, the government raised about 11 trillion naira from the bonds, from the fixed income market. Now tell us more about the bond market, the one for the month of May. What was the outcome?
So really, we did see that interest was skewed towards the new instrument, that's the new 9-year instrument, that's 2033, that was introduced in the bond calendar, for the month of May. And what we also noticed was that the interest, generally speaking, wasn't so much, because when we look at the bids, the size of bids were around 551 billion, as against what was on offer between the range of 100 billion to 200 billion. So what we definitely saw at the end of the auction was that the total sales was around 380 billion, below what they set out to offer. If you're looking at it from the midpoint to 200, that's from 150 to 200 billion an amount to be raised across the three instruments. And another thing that we also saw with the auction was that the stop rates, especially for the other bonds, that's the ones that were reopened, that's 2029, and that's April 29 and April 20 and the February 2031. Rates did close marginally down by just 1 basis point from what they did in the month of April. I'm talking 19.29% for the April 29 and 19.74% for the February 2031. But the new instrument closed at 19.89%, and that is still above what is currently trading in the market currently when we look at the range of bids so far since the auction closed yesterday.
Okay, so now, Nabila, with all of this, what does it translate? Is it telling us that investors are actually moving from the equities market into the fixed income market? Because what we have here is that the pension fund administrators, they're piling into the fixed income market after on the back of higher yield after the central bank had raised monetary policy rate to about 24.75% at their last MPC meeting. So what does it tell us?
So really, it's unsurprising if we see some form of redirection or movement by the fund managers or PFAs, as you mentioned, to the fixed income market. The yields are indeed quite attractive given the levels at which these instruments are trading. But when we put this in context, if you're looking at it on a year-to-date basis, just speaking to the S&P bond index and its performance year-to-date, we are at a negative 7% for if you are invested in a bond. That's if you have been invested in the fixed income market, specifically the bonds market, since the start of the year. Vis-a-vis the 30% that we're seeing the equities return on a year-to-date basis. So it depends really on perspective. If the investor is just, since there is the outlook for interest rates is currently to the upside, meaning we expect that interest rates will still trend higher, it's expected that some investors that want to take advantage and lock in their funds now for higher yields can do so. But it also means another thing, because with the high yields, it also implies that if you're marking to market your portfolio, you would be in the negative because you would have lost some value of your investments, that's if you're holding the instrument. But if you are a new entrant, you will be enjoying the high returns, that the high interest rate that we're currently seeing, especially if you intend to hold these fixed income instruments till maturity and not trade in between. You would lock in your returns from now, the moment you invest. For equities markets, yes, we did, in as much as there has been some redirections, once there is a positive activity in that space that would score in market sentiments towards that particular market, we'll definitely see some investors still remain in there. Because if we're looking 10 years back or 5 years back, the returns in the bonds market are no match for the equities market as far back as 10 years, 5 years, even on a year-to-date basis, as I earlier mentioned, we are 30%. The equities market is still trying to defend 30% return year-to-date, vis-a-vis the 7% negative return for the bonds market. That's especially if you have been in those instruments since the start of the year, and you are not just a new entrant, and you are marking to market.
Quite interesting, Nabila. And I think we'll leave it there. We would have talked more about the Naira, but I think we'll leave that discussion for tomorrow. But we thank you so much for your time on our show.
Thank you for having me.
I was Nabila Mohammed, a financial market analyst at Chapel Hill Denham, with information on the fixed income market. Now, let's talk about the Middle Eastern stock markets. We see mostly negative picture for the GCC stocks there. 0.16% decline for the Abu Dhabi index on the United Arab Emirates, while the other side of the still with the United Arab Emirates is still another negative. Now, for the Saudi Arabia Stock Exchange, we saw a 0.71% pullback on the Tadawul. This is coming as investors, UK cabinet ministers are visiting the country in a bid to bolster trade links with the kingdom, and they will be in the state for a 2-day summit, which is aimed at promoting economic ties between the two countries. Now, for the Qatari stock exchange, it was 0.13%. Now, we were talking about the Egyptian stock market, which was in the red. Now, this is coming as the headline inflation about from a couple of days ago declined to about 31.8% in April. Remember, we're talking about inflation across the world. We also have the one from the United States, which will be a subject of focus for many of the investors. So for the Egyptian market, we also saw the decrease in the inflation is attributed to increased availability of forex exchange, as well as a recent currency flotation, which helped to alleviate some of the price in the country with the largest population in the Middle East. Now let's talk about the U.S. stock market. We're seeing positive numbers across the world's biggest economy, and this is because today, right about this time, we're expecting the producer inflation for May to be released at about this time, and the economists are already proposing or forecasting that it gained by 0.3% from the previous month, and this is coming after the market had already had some positive trades. So, Ladi, that's it for the markets in a nutshell. We couldn't have Asia
all
markets.
eyes on that CPI data for April. That's the US, and definitely markets are going to react.
Yeah, they're actually two inflation numbers, the PPI as well as the consumer on Wednesday.
Thank you so much, Native, for the details there.
Pleasure.
All right, let's take it on to the UK now. We have Juliana join us from our London studio. Great to have you, Juliana. So we see the UK and Saudi Arabia, they're hosting a joint summit in Riyadh, and I believe that started, already at this time. But what are we expecting?
Good afternoon, Ladi. Yes, you're absolutely right. The summit, the 2-day summit, has already kicked off. The Saudi Great Futures Summit is really being described as a big moment for British business. That was kind of the sentiment that was expressed by Prime Minister Rishi Sunak, who delivered a keynote address, albeit televised, to participants earlier this morning. And the reason why I say it's a big moment is because the British government have gone to Riyadh with a delegation, the largest delegation that they've sent on a trade mission in the past decade. You've got 400 strong businesses being led by Oliver Dowden, who is the Deputy Prime Minister, as well as Kemi Badenoch, the Trade Minister, and Lucy Fraser, the Culture Secretary. And really, what the British government are trying to do is tap into, the Crown Prince Salman's Vision 2030 for Riyadh, which is basically plans to diversify away from oil. Now, if you look at trade volumes between Britain and the Kingdom, I believe in 2022, they were worth about $16.5 billion US. So this is no small trade partner. They really want to, boost these economic trade ties, as of course they always want to do anytime they travel abroad. But I think, there is more intent on this mission, because of course when it comes to diversification, Britain want to make sure that they're right front and centre when it comes to potentially leveraging on some of these lucrative contracts that Riyadh will be dishing out. And for the UK, services is a massive export for us. We are a service-based economy. It contributes about 80%. So in areas such as health and education, the Prime Minister really wants to make sure that Riyadh look towards Britain for that. So as I said, they'll be there for the next 48 hours. I know that we've got XX from British Airways as well as XX from HSBC on ground, but a 400 strong delegation, it kind of looks pretty small to some of the numbers we send abroad. We, as in Nigeria, I must say.
Yeah, quite small, just 400, at this time. It definitely looks like the UK actually mean business, this time, taking this much people out, even though it's not as much as Nigeria. But let's look at some data out of the UK now. We see real pay, that's grown at the fastest rate in about 2 years. About unemployment, is also rising. Have you seen this data?
Yeah, we have had UK unemployment data out this morning from the Office for National Statistics. And I suppose how you interpret that data depends on where you sit in your economist's hat. So UK unemployment is at 4.3% in the 3 months to March. universally, that is really, really low. But of course, because we're all on tenterhooks awaiting a possible dip in interest rates, it is really important data, particularly the details about wage growth, which sits at 6% month on month. So really, we haven't seen a significant climb. I think a lot of Citi analysts expected real wage growth to dip to about 5.9%. It hasn't. It's maintained that month-to-month rate of 6%, which isn't that much, but then if you think about it, that's still the highest rate of pay growth in 2 years. Now, of course, if you're somebody who's had a significant pay rise, that's good for you. And that's what the Chancellor said this morning, Jeremy Hunt, when reacting to the results. He said that's good. It does show that, of course, if you've got more money in your back pocket, that helps with the cost of living, which is still an issue in this country. However, we know that the labour market is what the Andrew Bailey, the Bank of England governor, looks at to determine whether or not inflation, interest rates can come down. And the problem is, if people have more money in their back pocket, they spend more, which means, of course, as we know, demand increases and inflation stays stubborn. So, yeah, it's going to be really difficult to see how they are going to react when it comes to the next Monetary Policy Committee gathering taking place next month. However, we do have all-important CPI data coming out next week, Tuesday, so perhaps that will provide more insight and clarity as to where the UK economy is heading and to whether or not we can expect interest rates to drop at the next meeting next month.
And another group, believe that, even though pay rises, their pay rises, as consumers might decide to just save that money instead of, spending and stoking inflation.
Yeah,
but
they did during COVID.
Exactly.
Absolutely.
How are the markets looking though in the UK?
Not great at intraday, although the blue chip index is in positive territory. It was way higher in the morning, but then we did have Hugh Pill, who's a deputy chief economist at the Bank of England, given a statement about this UK unemployment data, which has completely wiped off some of those early morning gains. But the all share is up. It's up by 0.13%. The FTSE 100, the blue chip, that's up by 0.16%. In the domestic market, the FTSE 250, also up by a smidgen at 0.04%. In the currencies market, the British pound is currently trading down against the US dollar by 0.18%, down 2 against the euro by 0.18%, and the British pound is trading down against the Japanese yen by 0.07% at intraday, Laddie.
All right, Juliana, thank you so much for the update. Thank you. All right, let's take it on to Europe now. We see the lack of skilled workers is costing Germany nearly 50 billion euros a year, according to a new study. Well, DW correspondent Chipona Tubelu joins us from Berlin to tell us what this shortage means for the German economy and what's being done to fix it. Great to have you, Chip. So just how bad is the skilled worker shortage in Germany?
Thanks for having me. Well, Laddie, Germany has a shortage of around 573,000 skilled workers, according to the German Economic Institute. And if every single one of these job vacancies were occupied, Europe's largest economy would be able to raise its economic output by 1.1%. Now, that would add 49 billion euros to its GDP. Germany's skilled worker shortage isn't new, but this study has a strong warning for the country, and that's that the losses to the economy could increase in the future if more isn't done to address the problem. In fact, the Institute estimates that Germany's economy could lose as much as 74 billion euros every year by 2027. The Institute expects the trend to continue because of the country's demographic development. Germany's population is aging fast, and there aren't enough workers to replace those going into retirement. It's a trend that companies fear may make Germany less attractive for investment. And it could also lead to reduced job satisfaction as the risk of overworking employees increases.
So what are the solutions here?
Encouraging skilled labor migration is one solution, and that is something that the government has been working on. A new law facilitating skilled worker migration took effect in March this year. And Germany's Federal Employment Agency is also looking actively for skilled labor in 13 countries across the world, including India, Morocco, Tunisia, and Ghana. Another solution is getting more women back into full-time work. While there are around 18 million men working full-time, only 10 million women are in full-time jobs. The German Economic Institute suggests making childcare more accessible to families. Now, the final solution would be raising the retirement age and also making it easier for older employees to remain in employment. The report suggests the government relax labor laws by making it easier for companies to make employees redundant. Experts also say addressing Germany's worker shortage will be more than just a government effort. Politicians will need to strike the balance between sentiment in German society and economic needs.
Quite interesting data there on the women, but what can we expect from the markets today?
Well, Laddie, European markets are expected to be little changed as they await U.S. inflation data on Wednesday. Investors are focused on inflation as they weigh how soon the U.S. Central Bank is likely to cut rates. Markets are now pricing in the likelihood of a rate cut by the U.S. Fed's September meeting. And here in Germany, investors will be also on the lookout for the results of a key business sentiment survey to be released by the Leibniz Center for European Economic Research. And in terms of economic data, German and Spanish consumer prices will be released today. And later, we will be getting US producer prices.
Right, all eyes on the data from the US to get forward guidance for rate cuts, going forward. Thank you so much, Chibonda Jibelu, giving us the details from Europe. Now, let's check some other stories. Now, we see Ghana's non-traditional exports increased from $3.5 billion in 2022 to $3.9 billion in 2023. The 2023 annual NTES statistics reports it all shows 11.75 positive variance compared to the 6.68% growth recorded in 2022. Growth was driven by a combination of structural changes in Ghana's NTES ecosystem and pragmatic implementation of the National Export Development Strategy. And taking on to Kenya now. The National Treasury in Kenya has proposed a PEG excise tax on betting stakes at 20%, up from current 12.5%. That's meaning Kenyan gamblers will pay the government 20 shillings for every 100 shillings they stake. That's if the lawmakers, pass the finance bill. Well, Kenya has the highest number of young gamblers at 76%, placing Kenya above countries like Nigeria and South Africa. All right, let's head to the commodity space. Now, we'll see the price of a 70-gram carton of noodles has fallen by 40%. From 12.5 in the past 5 months, about 7,500 naira recently. Meanwhile, food inflation has increased from 35.41% to 40% in the same time. Let's talk to Halima Dediro now, joining us from VI, Financial Derivatives Company. Great to have you.
Good afternoon, Laddie. Thanks for having me.
So while the divergence now in the direction of noodle prices, compared to the rate of food inflation?
Okay, so before we go to the reasons for the decline in the price of noodles, we'd like to talk about why the divergence in the rate of food inflation and noodles. If we look at the inflation basket in Nigeria, which noodles happen to be one of the items that constitute it, it is only attached with about 0.6% weight in the basket, which means that consumers only spend about 0.6% of their income on inflation. Though the basket is constituted in 2005 by the NBS, so when noodles has gotten dominance in the market, unlike what we have now. So it might not actually give us the right weight that is supposed to be attached to the commodities. And so that's why we are seeing that the direction of the food inflation rate is not really reflecting in the price of noodles. And that's on one hand. On the other hand, why we see a drastic decline in the price of noodles is because, one, noodles is consumed by a younger generation in Nigeria, the students, teenagers, younger adults, and they constitute about 60% of our country's population. And if we look at the yearly sales volume of noodles,
it's increased by about 38% to around 400 billion upward in 2023. So that is to tell us that the demand is really growing.
Right.
And because of this, we are seeing inflow of supply. That is, firms are springing up in order to produce this item. And we all know that this will bring about increase in the aggregate supply of noodles. And this is one of the reasons that also drive down the price. And recently, we see that palm oil and wheat is the major component in the input of producing noodles. But the price of palm oil is declining, which is good for the input price, while the price of wheat is increasing. But in order to have to look for a substitute which is cheaper in the replacement of wheat, producers are now using cassava to make noodles. And because the price of cassava is lesser when we compare it to the price of wheat, we are seeing a decline. That's why we are seeing that decline in the price of noodles. And it's likely to continue.
Okay, well, we'll keep tracking that price, see if it stays down, going forward. Thank you so much, Halima Adediro, financial analyst at FDC. Thank you. All right, now let's get a check on South Africa now. See South Africa's unemployment rate, that's climbed to 32.9% in the first quarter of 2024, up from 32.1% in the fourth quarter of 2023. And that's according to data from Statistics Agency released today. This comes just 2 weeks before an election, with joblessness remaining a significant concern for voters. Statistics South Africa said the number of unemployed people rose to 8 million in the first 3 months of this year, from 7 million in the last 3 months of last year. All right, now let's head straight to the markets. Now we see the call on the screen, predominantly red at this time this afternoon. But Solana in the green, XRP in the green, Near Protocol managing to stay in the green, but Bitcoin there. We see that weakness when it comes to the price, 1.88%. Ethereum still below that $3,000 psychological level. Let's look at the sentiment in the market right now. Still a greedy market, even though we're seeing no direction, at this point when it comes to the price of Bitcoin. Don't know if it's bearish or bullish, but it's 66 points there for the Fear Greed Index. All right, let's talk to Emmanuel Onyasi now. He's a crypto influencer. Join us via Zoom. Great to have you on the show.
Yeah, hello, good afternoon, Ladi.
Yeah,
so good to be here once again.
Fantastic. So we're seeing some data out today. Crypto exchange Coinbase, their report showed that just 56 billion was traded by consumers in the first quarter of 2024, and that's below 133 billion. That they had in the previous quarter in 2021 when there was a real rally that time. So it seems retail investors are getting tired, at this time. What do you see?
Well, I don't see that. I think it's just following the normal, the normal. I think we actually had more volume compared to like previous bull season. Well, exceptional of 2021, because when you look at 2021 very well, you discover that 2020, 2021, we had this COVID-19, this pandemic. Everybody was at home. Many countries were printing free money and giving people to sustain themselves. These people didn't know what to use this money for. So they were actually using it to put into risky assets that they can get higher reward with free money. So we actually saw such kind of things happen in 2021. There was so much money in circulation, which actually led to the inflation that everybody is fighting in this 2023, 2024. So I think every country is trying to bring down inflation. US last year, throughout, it was just inflation, trying to hike interest rates and all that. I think that is what is actually affecting this market currently, because there's not much money in people's hands, institutional investors, and to actually come and buy some of these digital currency. And also, we didn't see some of those big players we saw in 2021, people like Tesla and other people actually coming up to actually invest. We are just seeing few people actually coming up to actually invest. What is actually pushing us this year lately is because of the ETF that they actually packed. So I think we are still just at normal range.
Okay.
We can't get 2021. It's very difficult.
Right. So talk to me now. We're seeing weakness with the naira this time. P2P speculators still betting against the naira very quickly.
Well, I don't know anything P2P again because Binance, Binance is no longer operative. And other ones that are actually operative are actually small P2P this thing. So, like I said before, crypto is not because of the decrease in naira strength or the constant increase in naira rate compared to this. I think there are other bigger factors that actually push this forex, this naira upwards. I think they are the manufacturing industry.
Right.
I think they contribute a lot in actually the forex than cryptocurrency.
Okay. All right, Emmanuel Nasi, thank you so much. Always great having your perspective. Thank you.
Thank you.
All right, so that's the show today. Thanks so much for watching. Remember, you can visit channelcv.com for more updates, and you can watch this again on our YouTube channel. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.